Welcome to this video, which is on Sunday the 19th of February. What I want to do in today's video is look at the potential for the Australian dollar to have a big fall against both the USD and the JPY. I think the Aussie could move several hundred pips lower on both pairs. Now, in relation to these pairs, I did do videos recently looking for the same thing, i.e. the Aussie dollar to have a big break to the downside. It hasn't happened yet, but upside momentum has definitely waned, and I think the odds have increased of a downside move in the Aussie since I did my last video reviews. Now, in terms of both pairs, we're going to be looking at the charts in a moment, and also looking at the charts using our favourite country trading indicator as backup to give us clues to where price action may go, the CFTC net traders. Now, before we look at the charts of both pairs, what I want to do is just look at a correlation. I always think, you should look for correlations in terms of getting clues to where a currency pair might go. Now, when I'm talking about correlations here, I don't mean correlations between currency pairs. I mean between different financial assets. And the correlation I want to look at is the S&P 500 stock index and the Aussie dollar. The correlation that's been in place, and the correlation now I believe is breaking down, which is a warning sign that the Aussie dollar could be about to make that downside break we've been looking for. So I'm just looking at this correlation first of all, then both the AUD USD, AUD JPY charts, and then I'll be back to sum up and make some additional points in relation to these pairs and just trading Forex generally. So let's start first of all with the S&P 500 AUD correlation. S&P 500 weekly chart. I just want to look at a simple correlation between the S&P and the Aussie dollar. Now, I think we can get clues from what is going on in the S&P in terms of what will be going on in the Aussie dollar as we move forward. So the simple correlation I put down is simply S&P 500 strength equals AUD strength, and this has been in place after Trump won the election victory. And if you look at the Aussie, the way it's moved up, when the S&P broke above 2180, which is basically this cluster of candles here, you see the Aussie really firm up on the USD in this time period here. Now, in terms of the breakout above these two candles and above 2300, got a nice big blue candle to the upside here, and then we gap higher on this candle here, and we finish near a high. Now, if you look at the last 14 days, okay, and we're going to do it in a moment on the AUD USD chart, the Aussie dollar has not been able to make significant headway on the USD at all. It's around about where it was 2 weeks ago. So the fact that the S&P has really been surging and the Aussie dollar now is not moving higher with it, i.e. it's diverging, I think that is warning of a break. I personally think the stock market is going to correct, and that's definitely, in my view, can help the Aussie come down. But even with more strength, the Aussie doesn't want to go higher. So I always think it's a good idea to look at intermarket analysis, as it's called, other financial instruments to get clues of what's going on in the currencies. You can also look at the commodities as well. Obviously, if commodity price is strong, the AUD is strong. If you look at Australia's main export, which is iron ore, that's been really strong in the last few weeks. Again, the Aussie has not been able to make headway to the upside on the USD. Now, there's other reasons why I think the AUD is going to break down, but this going on in the background, adds weight to our view. So now let's switch to looking at the currency charts. AUD USD daily chart, and basically I'm just going to go through the chart where I think we're going and what clues we're getting from this week's CFTC net traders positions. But first of all, just going to give you a setup. It comes from one of my favorite indicators, which is ADX, or average directional movement, developed by Wells Wilder. Now I've put it on the chart, and I'm just going to give you the setup. You can go and look at this setup on other currency pairs, and look for the setup and just see how accurate it is in terms of indicating that a major trend change could be near, or at least really good corrective action against the existing trend. Now, if you've ever seen the ADX, you'll normally see three lines, the DD plus and minus, and this line here. Taking the other lines out, don't need them for this setup. All we're looking for is a move above 40, okay, here. Then for the ADX line to turn down. If the trend is up, that will indicate that a trend change could be near. It also indicates that in a downtrend. It's just basically indicating the existing trend is going to come to an end. You won't get many setups using the ADX like this, but if you go back and check on your charts, just look for moves above 40 and a turn down, you'll see just how accurate it is. It's a very underrated indicator. The way I use it, very simple. You go and test it out for yourself. Regular viewers of mine will know why this 40 downturn really interests me as well in relation to the shape of this move up. Now, in terms of moving to the CFTCs, what are they telling us this week? Just for new viewers, I'm just briefly going to go through how we read the report, and then we'll go through the positions. Now, in terms of the way we read it, it's basically futures positions on the Chicago Mercantile Exchange, sizable part of the FX markets, and we can get clues towards the sentiment that traders have towards a currency pair by just looking at two groups, non-commercial and commercial. Now, just to explain the groups very quickly, non-commercials, they're basically funds, managed money. They tend to have a poor track record in terms of catching turning points. They're called heavily net long market tops, heavily net short at market bottoms. Managed money, bad performance over the longer term, and obviously they're influenced by greed. Now, in terms of commercials, they're the smart money. They are hedgers. They're not making or losing any money. They just hedge a cash position. Now, these guys have a deep knowledge of the fundamentals. Also, they're very objective. There's no greed involved because they're not making or losing any money. They're just hedged. They have a great track record of predicting major market tops and major market bottoms. So they tend to be right at trend changes. Non-commercials tend to be wrong. Now, just state they're just hedgers. So the only time they're ever going to move their hedges, okay, they're not making or losing any money, is if they think, prices have moved too far from fair value, okay? So let's look at the report. What we have here, non-commercials, long the Aussie 79,000, short 55,000. So they're now marginally long the AUD. Now, in terms of the commercials, they're long by 16,000 contracts. They're short by 49,000. And basically what they're doing is they're moving they're net short by over 2 to 1. And they're adding into their shorts. Now, in terms of reading this report, if you read it each week, you get used to the way these groups move in different pairs. I just want to go through something I think is very significant in terms of the way the groups are moving. Put here on the break above 75, the commercials who had been net long go to a neutral position. So they start to get rid of their Aussie dollar longs here. They were long all the way up here, okay? Then as we move above 76, they start to sell the Aussie dollar aggressively, okay? Now, in terms of the speculators or non-commercials, what were they doing? Well, they were short the Aussie dollar here, moved neutral here, and then started to buy here. So basically, they're moving into long positions. The commercials are selling heavily short. In fact, the commercials have been selling heavily short for the last few weeks on this move up here. Same story happened back in November. Specs bought this rally up. Commercials sold it. Now you got a nice big break to the downside. Now, my own view is the commercial selling heavily is a warning sign. We're near top. And if we look at the chart, okay, we've lost momentum above 77. So sorry, 77, come back through it. I don't rule out move up maybe to 77.50. I just don't see sustained strength now in the Aussie dollar. We noted in relation to the S&P, that the Aussie dollar hasn't really been able to power higher. Okay, here's from 2 weeks ago, the candle. You see where we are there, where we settle. Look where we settle here, hardly any difference. So the S&P is now not helping the Aussie go higher. So my view is we should now go down to 75. I think that's a good first target, major level of support, and it's where the groups actually started to change their positions. Then I think we're running on all the way down to 72. Okay, and yeah, regular viewers of mine will know already that I think the Aussie is going down sometime this year, down towards the 74 level. Now, yeah, when I was looking at this, I think it was a couple of weeks ago, yeah, we were basically bearish then. We haven't really seen a breakdown yet. However, I think, yeah, the odds of a breakdown have now increased. Yeah, we got the CFTC net traders indicating a break, S&P 500 indicating a break, put up the ADX as well, which I think is indicating a break, and the fundamentals, in my view, behind the chart are bearish Aussie. So 77 to 72, if we did get there, it would be a really nice rundown. It would be fantastic if we get to 64, but happy if we got to 72. I don't think the risk is too great on this pair in terms of you've got clearly defined level where you can put stop, and the risk to reward, in my view, is very good. So we'll see what happens, but I think we could see a really nice break to the downside. We'll see if we get some follow through selling next week, see if we can sell off into the new weeks. That completes my view of AUD USD daily. To the AUD JPY daily chart, just want to look at the monthly chart, see the really big levels and also the potential for an Aussie dollar fall. Now, in terms of the big levels, I think monthly chart always gives you that bigger perspective of where price action could go. What we have here, obviously a nice fall down, find support at 76, then big blue candle up through 80, then we move up to 88, drop this candle here, see that as a failed breakout, come back below these resistance lines here. Now, from my perspective, I think if we go back up towards the 88 level, we'll fail again. We go through 86. I see minor support at 84. I do not think that's going to hold. I think we'll go down to 80, then to 76. So if this move does come to fruition, obviously it's just my opinion, it would be a really big move to the downside. I also put 2008 financial crisis sell-off level at 58. Yeah, regular viewers know I still think we are going to have a financial crisis, and I could see the Aussie getting down to there some point this year. But in the short term, I think if we got to 76 or even 80, we'd be very, very happy. Now let's go and look at the daily chart and how the levels line up there, and look at the CFTC net traders. The AUD JPY daily chart, look at the chart in a second. Just want to look at the CFTC net traders first of all. Now, you don't actually get cross rates on the CFTC net traders. What you need to do if you want to see how the groups line up is look at AUD USD and then JPY USD and create the cross yourself. And I've just done it very simply in terms of ratios here. Commercials, they hold 4 times as many short positions in this pair as long positions, so clearly bearish AUD JPY. Non-commercials, the exact opposite, 4 times as many long positions as shorts, so obviously bullish. Both groups have added on this move up. And now if we just look at the chart, we're saying 88 was a good level of resistance on the monthly chart, and you obviously got double top here, fall down to 86.40 or about 86.40. Now, drawn a couple of trend lines here, one through these blue candles, top and bottom, and a up-sloping support line as well. Also got the 20-day moving average, the green line there as well with the support. And yeah, regular viewers will know that I consider support levels line up with the 20-day moving average. And let's say in this instance, we break below, I consider that will be a move that should follow through to the downside, or the odds favour it in my view. So what I'm looking for is a move through 86, 84, first level on the daily chart. Said that was minor support on the monthly. I believe it will prove to be if we do break down. So I'd be looking for a move down. First target would be 80. Okay. I also did 76 on the monthly chart. Blue candle here on the left, but 80 first target. So if we break lower, stop should be back, well back from 88. If we bounce higher, I would sell it back to 88. Look for momentum weakness. Stop probably behind 89. I think the potential downside in this pair is really good. Risk reward is good. Yeah, if the trade is wrong, yeah, it's decent risk reward to us. And one other point I just want to add in before I leave this chart is, yeah, if we think about the S&P, I was saying about the AUD's relationship with it. Japanese yen, yeah, if we do see a correction in stocks, it doesn't even have to be a major sell-off. We just see correcting action. That should firm the JPY, obviously the #1 safe haven currency. So for this pair here, I'm looking for a decent break to the downside. We shall see what happens. Now, that completes my view of AUD JPY daily. Got back off that short summary there of AUD, USD, AUD, JPY. That's my view at this moment in time. Obviously, it can change in line with the market action. If you want our daily charts analysis of major forex pairs, you can simply click on the link beneath this video. Now, for perhaps new viewers to our videos, I just want to explain a little bit more about the type of analysis that we've just done. Now, in terms of price action, the chart is very important to us. We will very often just trade technically. However, in terms of trading with sentiment, okay, gauging what sentiment is from CFTC net traders positions, that allows us to generate bigger targets, which you cannot do just technically from a chart, in our view, and gives us really great risk reward trades. Now, well, traders say just look at price action, sentiment. Traders is reflected in the price. No, it isn't. You cannot measure trader sentiment by just looking at a price chart. That is where a tool like CFTC net traders is so important in our view. Now, in terms of the CFTC net traders report, you're not going to get setups all the time. You've got to wait for the right setups, and you've got to wait for the commercials to diverge away from the non-commercial speculators, and then in our view you go with the commercials. Now, in terms of going with the commercials, just don't come in and let's say sell with them. You need to confirm technically on the chart, okay, need good stop loss protection as well. They are right about every major turning point. I've been looking at that report since 1986, okay. However, the catch is they can be wrong in the short term for a good period of time before it breaks in their favour. Doesn't matter to them because, of course, they're not making or losing any money. They're just hedgers. So, got to be careful with our timing and also our stop protection. Now, in terms of timing on the charts, you'll notice those charts have very few levels of support and resistance on them. What you should do when you're doing your chart analysis is focus on big levels that matter. When I say big levels that matter, I mean the major institutions, the ones that they're going to key off. Don't clutter the chart with meaningless, small support and resistance levels. Keep the chart nice and clean. In terms of getting the big support and resistance levels, look at the bigger time frames as well. Line them up with the dailies. It's a very simple thing to do, but very few traders do this. I think it's time well spent. Now, in terms of these types of trade, I think why it's a great way of trading this setup is because the logic is easy to understand and have confidence in. It's not difficult to do, okay? Also, the risk reward is very good in terms of this type of trading. Like I've said, if you know the sentiment behind the chart, you can project yourself a bigger target than if you're just trading purely technically. Now, in relation to these types of trade, one of my favourite trade setups for sure. And yeah, in relation to, I was just looking at our hit rate on them over the last 2 years. It's 36%. So that's how many we've won. We've lost 64% of this type of trade. Yet we're well ahead in terms of profit. Obviously, the winning trades are far bigger than the losers. I'd strongly recommend anyone who's not looked at trading, the CFTCs, in relation to the price chart, just go and research doing it. Look up our other videos on this style of trading. It's a simple setup. It's one you can have confidence in, one over the longer term, which can give you an edge in terms of making longer term profits. So that is the video for today. What I will do is obviously I'll update our view of the AUD in the member centre, but I will come back and do a video on YouTube as well. We'll see the Aussie dollar does turn down, what happens with price action. So we'll follow this up with other video probably in the next week or so. So thank you for watching me as usual. Take care. Have a good day.